Hello everybody, this is Dr. J. Mallikarjun and I will be continuing with the Indian Partnership Act 1932. So we are now discuss about chapter 2 which deals with the nature of partnership. The sections are sections 4 to 8. The important aspects that are covered in this chapter are partnership and its essential elements, nature of partnership, then something called as salaried partner, which is peculiar. Then what is partnership at will? So the chapter, as I told you, contains 5 sections. Section 4 deals with the definition of partnership and partner, then firm and firm name. Then section 5 deals with partnership, indicates that partnership is not created by status. Then section 6 talks about the mode of determining whether a partnership exists or not between the persons and whether the person is a partner or not. What is the mode of determination? Then section 7 talks about partnership at will and section 8 talks about particular partnership. So now let us see the various provisions. First, section 4 talks about partnership. So partnership is the relation between persons who have agreed to share the profits of a business carried on by all of them or any of them acting for all. So here, the important aspects are it's a relationship. Then second is it requires persons. Then who have agreed. So there has to be an agreement. Then the determining element is sharing of profits. Then it should be of a business, that is a profit-making entity. Then it should be carried on by all of them or any of them acting for all. So there is an element of mutual agency. So persons who have entered into this kind of a relationship are called as partners, and the collectively these partners who are doing this venture based on this agreement, it is called as a firm, and the name with which this firm operates is called as the firm name. So what are the essential elements of partnership? So first is partners, that is more than one person. You cannot have a partnership of one person. So if there are two persons and one person dies, automatically the partnership will go. Similarly, one person becomes insolvent, automatically the partnership will go. So you cannot have one person company is possible, but one person partnership is not possible. The second essential element is an agreement, and it is not necessary that the agreement has to be should be in writing. The agreement could be oral or written, or partly oral or partly written. So we'll have to refer to section 11, which talks about the mechanism of terms of agreement between the partners. Then section also talks about business. So business is defined in section 2, and it says business means every trade, occupation or profession. So we'll try to examine what are the things in relation to business. Then sharing of profits is essential as per the definition, but sharing of losses is also something which goes along with it. Then mutual agency is a very essential element which determines whether the relationship is partnership or not. So here, the business of a partnership has to be carried on by all partners or any partner or agent of any partner acting for all. So it is not necessary that everyone should act. Some people acting on behalf of all, or a representative of some acting as for a partner, and so this partner acting for all is also sufficient for making the relationship a partnership. Then first, let us see the element of partners. There has to be at least two persons, and these two persons should be having the capacity to contract. So one of the essential elements of capacity to contract is that he should be a major, that is not a minor. So minor can also be admitted into a partnership for the benefits, but subject to the consent of all the parties, but he cannot be held liable. He or she cannot be held liable. Similarly, an insolvent is not in existence as far as the law is concerned. It's called civil death. So such an insolvent person is also ineligible to be a partner. Then lunatics, etc. also cannot be partners. Then body of persons cannot be a partner in a firm. So this itself is an unincorporated body, and within which you can again not have any association of persons or even a Hindu undivided family to be there. So the person, a karta of a Hindu undivided family, can be a partner in a firm, but he cannot be there in the capacity of a karta and also as a person. So this representative capacity's presence in a partnership firm is not something which is permissible. So a person, same person cannot be in a partnership in two capacities. So he has to be as individuals. Similarly, two Hindu undivided families, kartas could be partners, but they will not be representing their partnership firms, but they will be treated as partners for the purpose of the partnership where they are coming in as partners. Then the same set of persons cannot be in more than one firm if they are involved in the same business, because it doesn't make any sense in having multiple partnerships. But if they are doing different ventures, for each of those ventures, they could enter into separate terms, because of which you could have different partnerships of the same persons for different activities. Then the second essential element of a partnership is agreement. So agreement is in accordance, you will have to look at the terms of the Indian Contract Act relating to what agreement is and what essential elements of contract that need to be fulfilled even for a partnership contract, because partnership is a special or a specific contract. So the essential elements of a contract to make the agreement enforceable should be there even in a partnership agreement. That is, it has to be between competent parties for a lawful object with lawful consideration and free consent without mistake, misrepresentation, fraud, or coercion, undue influence, etc. So those requirements need to be fulfilled insofar as this agreement of partnership is concerned also. Then it's not necessary that there has to be any express or formal or written agreement which is referred to as a deed of partnership. That is not necessary. However, for the purpose of getting the benefit of the firm under the Income Tax Act, Section 184 of the Income Tax Act indicates that the partnership has to be written. The reason is, in this partnership deed, the income tax authorities would want to know who are the persons whose incomes are supposed to be pooled, whose expenditure and losses have to be adjusted, etc., and the profit sharing, etc., has to be worked out. For that purpose, a deed of partnership is a proof of these people working together as a firm. Then who are the partners? They are subject, their details need to be provided, and what is the mechanism of sharing of profits also is supposed to be made known in this deed of partnership. So from that point of view, if the firm wants to be treated as a firm for the purpose of income tax purposes, then it needs to be having a deed of partnership. Otherwise, for normal partnership, it is not necessary that you should have a deed. Then agreement of a firm with a minor as partner, which includes both not only the profits but also the losses, is void ab initio, because the agreement, the party does not have a capacity to contract. The only provision that is there is he can be admitted by consent, with the consent of all the partners, to the profits of the firm, but he cannot be held liable. So he cannot be accountable for the losses of the firm. If that kind of an agreement is there with that party, a minor being a party, then the agreement is void. Then agreement can be implied from the conduct of the party. So it's not necessary that you should have a formal written agreement. Section 11 makes it very clear that the mutual rights and duties of the partners are determined by agreement. And this agreement could be express or implied, and any change in this terms of agreement can be brought about again by the consent of the partners, and this consent also could be either expressed or implied. And it is not the title of the deed that it is a partnership deed that makes the relationship a partnership and the persons who are signing this deed to be partners, but it is the intention of the parties to fulfill the requirements of the elements of partnership that is necessary for making an agreement to be a partnership agreement. Then the partnership deed is always necessary, and it's important to have it because it provides clarity about the terms of agreement between the parties, the ventures that they are taking up, and what is the inter se relationship between the partners, who will do what in the partnership firm. So that comes out very clearly in a partnership deed, and it makes very clear for the third parties also to understand what are the terms of engagement of the entity with whom they are dealing, so that they are clear about about the authority of the particular partner to do something vis-a-vis third parties to bind the firm or do something where the firm cannot be bound. So those items become very clear if you have a partnership deed. Then the agreement itself indicates what could be the kind of partnership. It could be a particular partnership where it is intended for a specific undertaking, or you could have a partnership where there are multiple undertakings. So that is also possible. So particular partnership is section 8, which says for one particular venture or undertaking that persons come together. Then whether the partnership is for a particular time and whether there is a mechanism of determining or ending this partnership, if that is provided for either in the form of a duration or a mechanism of closing, then that partnership will be not treated as a partnership with will. But where the agreement does not contain any provision for duration or determination of partnership, then the partnership will become, if it continues beyond the duration, or if it is not having any duration, then it will become a partnership at will. So you could have a partnership agreement indicating a fixed duration or a fixed event. Say, I will do this partnership. This partnership will be for the purpose of shipping the goods. Once the shipping of goods is over and the goods are delivered, automatically the partnership will be terminated if it is provided. But if the partnership continues, then it will be treated to be as a partnership at will according to section 7. A partnership at will be, it will be very easy for the partners to go to retire and also for the firm to be taken for dissolution. So we were talking about the partnership deed. So what could be the contents of a partnership deed? The indicative items are that what is the name of the firm, what is the duration of the partnership, what is the nature of the business of the firm. The items that are indicated with an ampersand with a @ mark here are those which are required for application under section 58 of the Act for the purpose of registration of a partnership firm. So these details have to be given in accordance along with a statement to the registrar for the purpose of registration of a partner. So what are those details? First, the name of the firm, duration of partnership where it is indicated, then place of or principal place of business of the firm and other places where the firm would carry on its business. That is, what is its main office and the branches. Then the information about partners is something which is very important. That is, names of the partners in full, their permanent addresses, communication details. And another very important aspect as far as liabilities, rights and other things are concerned, duties, etc. are concerned, and relationship with third parties, etc. is concerned, is the date when each partner has joined the firm. So these particulars are necessary for the purpose of registration. But there are other particulars which are necessary for the purpose of for clarity in terms of how the partnership relationship is entered into. One of the important things there is one, nature of business. Already here you could indicate specific activity or more than one activity. If it is specific activity, particular adventure or undertaking, then it becomes a particular partnership. If there are more than one, it becomes a partnership for more than one activity. Similarly, if the duration is there, then it becomes a determinate, there will be a determinate time for the partnership. If there is no duration specified, it will be treated as a partnership at will. Or where there is a duration specified and after the duration also, the partnership is not dissolved, but it continues, then it becomes a partnership at will according to section 7 of the Partnership Act. Then the other items that could be there are the capital contribution by partners. What do they bring in terms of money, assets, property, etc. Then if someone is contributing in excessive amount than what others, then what is the rate of interest at which this capital is, additional capital is paid. Then provision for increasing of capital, etc., which can be also indicated. Then what constitutes the property of the firm. So which of those things which are brought in by the partners will constitute to be the assets of the firm, because this is important at the time of dissolution and distribution, etc. Then creation of something more from these assets or utilizing them for the business also makes things, the treatment of them different. So from that point of view, you can bring in clarity in this aspect, in this regard. Then sharing or allocation of profits or losses, the proportion for each partner is supposed to be indicated for clarity, because that's an essential element of a partnership relationship. Then partnership agreement, the other important aspect is the rights and duties of partners. So what are the operational aspects relating to conduct of business? It's almost like what you have in case of a company in the articles of association. So what is the authority that is there? What is the decision making framework? Who can draw from the accounts? Who can sign on checks, etc. So authority, responsibilities, management and voting, what each partner can do or will do and what partner cannot do. So there are certain things called implied, what is it? Implied authority. So if you want to change implied authority, you will have to incorporate here that these are the things he can do and he cannot do, etc. Then how are the decisions to be taken, etc. Then another important aspect in respect of any business undertaking is the bookkeeping, accounts, preparation of annual balance sheet, profit and loss account, audit, etc. Then what is the procedure in relation to addition, incoming partners, removal of partners, etc. Because expulsion, there has to be an express clause in the partnership agreement. Only then can a partner be expelled. Similarly, retirement of partners also you could have a clause. So what is the clause when a minor, what is it, a partner dies, whether it will continue or whether it will cease? Then what happens if any person becomes insolvent? Partner becomes insolvent. So those kind of events could be provided for in the partnership so that you can have a continuation of the business in spite of these events occurring. Then the terms and conditions of removal, addition, etc., they can be specified. Then dissolution and settlement of accounts and allocation of assets and profits on dissolution, you can bring it out in the partnership deed for clarity, because whenever someone wants to go, you can exercise the decision in accordance with this, pay him up and then resolve the matter without having to go either for arbitration or for a suit. Then provision on death of a partner, as I already indicated, whether the minor will be admitted for profits, whether the wife will be paid an annuity, whether an annuity will be paid to the minor, etc. So those items can be decided. And last but not the least, you need to have something about dispute resolution, because it is bound that partners may have some small disagreements, and how do you settle it? Whether it has to be by mediation, arbitration, or by suit, etc. You need to have clauses relating to that as well. Then the next aspect, so now we have seen partners, then you have agreement we have seen, and the third part is business. So section 2B defines business as every trade, occupation, and profession. While trade is something where you are buying and selling goods and automatically there is an element of profit which is involved, it can be treated as business. But where there is an occupation or a profession, it is important that this must be for the purpose of earning a profit. So this, only those activities will be treated as business for the purpose of a partnership firm. So then the society for religious activities or charitable purposes, voluntary association or clubs or trade or consumer protection societies, then building or benefit societies, which are basically for mutual benefits. So these don't qualify to be businesses for the purpose of a partnership firm. Then the essence is in terms of people coming together for the purpose of gain. And for an example, if someone A and B buy 100 bales of cotton to sell it on their joint account, for earning a profit, it becomes business. If they buy cotton for the purpose of their own consumption, then that does not constitute any business. And profit is the essential aspect of any business operation. Then the relationship or the business need not be permanent or for a very long period. You could have a single particular partnership, or you could have a duration based partnership. Then agreement for future business does not make the partnership. So a partnership has to be for a business up and running, not for something which is going to be starting at a later date. So the provisions and other things will start becoming applicable only when the business takes off. Otherwise, it's just an expression of what is it, intention to start a partnership. When the agreement becomes a partnership only when the business has taken off. Then sharing of profits. This is a very important aspect of partnership, and mere sharing of profits does not make it a partnership. So we'll see some examples also subsequently. So if there is a joint ownership of property and they are generating profits and they are distributing these profits, does that mean that it is a partnership? So we'll have to see the facts and circumstances to ascertain whether this sharing of profits will be eligible to be treated as a relationship of partnership or not. It's just one of the elements, but it is not the only element or the most determining element. Then subject to contract, section 13.2 and 13.1 talk about the profit, etc. So section 13.2 says that sharing of profit and losses is equal among the partners, subject to the terms of contract. So if there is no term in the contract relating to sharing of profits, it will be deemed that everyone will be getting a proportionate share. Then, because they are eligible for a share and they are all principals operating the business, they are not entitled to receive any remuneration for either taking part in the business or in conducting of a business. This is in accordance with section 1, and here also you could have this is also subject to the terms of contract. So you can specify that someone will get only a wage, and that is where you have the next aspect that I would be liking and I would like to talk about, that is a salaried partner. So here the term itself, salaried means he's an employee. Partner means he is one of the owners. So there is an inherent contradiction in the term salaried partner. So he is a person who is paid a regular salary, irrespective of whether profits are there or in the form of a bonus, or without any relationship with profits also he could be paid a salary. Then what is his role and whether he is a partner in the real sense or not has to be examined based on the facts of the case, based on the terms of the agreement, and the substance of the true nature of relationship between this person who is designated to be a salaried partner and the other partners. So what are the indications to see whether he is merely a salaried partner or a partner? First thing is whether he is treated as an employee or a servant, or whether he is treated as a partner. That is something which has to be checked. So if he is subject to liabilities, if he has a share in the profit, etc., then you can conclude that he is both sharing the losses and profits. So he will be treated as a partner. Then how is he treated within the company? Whether he is, whatever he does, is it permitted, and is the mutual agency concept extended to a salaried partner also? If it is, then he becomes a partner. If it is not, then he is treated merely like an employee. He does not become a partner. Then what is the position as perceived by third parties? Whether the third parties perceive him to be a partner or an employee also is an indication that will and based on the third party's perception, how the partnership firm deals with the acts that have been done by this salaried partner will also determine whether the relationship is that of a partner or of an employee. Then the concept of salaried partner is different from a working partner as per section 40 of the Income Tax Act. So a working partner is one who is receiving share of profits and contributing to losses, and he has a role in the management of affairs of the firm, and he is being paid for that role. So then he will become a working partner. So here the income tax treatment of a partnership firm is talked about in section 184. I told you that there has to be a deed of partnership for getting the income tax benefit, and in the deed of partnership, if the person is named as a partner, then automatically that fellow will become a partner, whatever be the titling of him. He could be a salaried partner, but if he is named in the partnership deed as a partner, he will be treated as a partner. Then partnership agreement by partners without a share will make it an association of individuals for the purpose of tax treatment. So this is as far as for the purpose of income tax benefit of a partnership firm, they have to have a registered deed and have the person's name there. If they, and whenever there is any change in the partner, they will have to submit the return along with the new set of partners. But if they don't do that, or if they don't have a deed and enclose the deed with the return, then they will be treated as an association of individuals for the purpose of taxation. So if the salaried partner also has to take a share, if he is a signatory to the partnership deed. So if the salaried partner, if he is indicated there, he becomes a partner and he will also put his sign across in the partnership deed. If the salaried partner is kept out of the liability, but merely paid some remuneration or remuneration linked with profits as a bonus or something like that, then you can presume that he is not an employee, but he is he is not a partner, but he is a more an employee than a partner. So this is as far as the salaried partner is concerned. Then mutual agency is the essence of what essence of the relationship of partners. So it says partners acting together or one person or his representative acting for all. If in the relationship this is what is happening, then that relationship is a partnership. Then the person should not only act for himself, but he should act on behalf of the firm. And when we say firm, it is the collection of individuals. So he should be acting on behalf of all the other partners in the firm. So he will be acting as an agent while he is acting and binding the principal. And while someone else in the firm acts, he will be bound like a principal for some other person's act. So the essence of partnership is captured and enunciated in the case of Cox versus Hickman. I will talk about it in the next slide. Then the liability of one partner to the other for the acts of the firm is liability of principal for the acts of the agent. Then each partner has an implied authority to bind the others. Then each partner has a right to take part in the business. So these provisions of the rights and duties of partners will make this relationship is more like an agency relationship, and that's the reason why mutual agency is something which is very, very important. You could have different roles assigned to the partners, but ultimately the essence of agency, if it is there in the terms of relationship between the partners, then that will be a partner. So you could have different categories of partners like managing partner, administrative partner, sleeping partner, etc. Then you could have equity partner, that is someone who contributes to the capital, someone who does not contribute to the capital but merely puts in his effort, and someone who gets a regular remuneration like a salaried partner. Then there could be someone who is a part-time person, and there could be someone who is a full-time person. So these titles don't matter, but ultimately what is important is one should be capable of acting for all and bind them for whatever actions that he does. So this particular case where this point comes out very nicely is in case of which has been enunciated nicely is the case of Cox versus Hickman. So here, basically, B. Smith and J. Smith is a firm which was doing the business as iron workers and corn merchants under the names B. Smith and Son. So these people owed money to a lot of persons, and the creditors included Cox and Wheatcroft. So the creditors entered into a majority of the creditors entered into an arrangement with this B. Smith and Sons. And in that deed of arrangement, it was indicated that now we will create something called a Stanton Iron Company, and that will carry on the business from now on. And there will be trustees appointed from the customers to be from the creditors to be receiving money. And the Stanton Iron Company has been insulated from Smith by saying that creditors could not sue Smith for existing debts. So they will be collecting the money that they owe, and then they will be carrying on the activity. So here, Cox did not act as a trustee. Wheatcroft acted as a trustee, but he subsequently resigned in 6 weeks, after which there was no trustee. So this group of people who were operating Stanton Iron Company, they were provided goods by Hickman, and he drew for that purpose 3 bills of exchange. These bills of exchange were accepted by the Stanton Iron Company, but they were not honored. So a suit was filed by Hickman, and since Cox is also associated as one of the creditors, he filed against him saying that he is a partner of the firm, Stanton Iron Company, and this partnership is doing the business and he is also liable. So as far as the position of Cox is concerned, he can be liable if he accepted the bill and gave the impression to Hickman that he had the authority to accept, but he did not do so. It was not him who accepted the bills or authorized another to accept the bill. So could he authorize another person to accept the bill? And if he could do so, then is there an implied authority to do so? If he is there will be an implied authority if he is a partner. So the contentions of Hickman were that there is a partnership between the creditors. They were running the business of Smith and Sons in the name of Stanton Iron Company, then the creditors participated in profits. That is, whatever money is there, they used to be getting that. And in anyone may bind all of the others. So they presume that there is a mutual agency that existed between all these people. Then the question was whether there is a partnership among the creditors of the firm Stanton Iron Company. So it was the court held that there is no partnership because creditors did not operate the business. They merely conducted the activities and received money. They put in place a system for getting their dues repaid, but they didn't do business. Then the deed is only an arrangement for creditors to get repayment of the amount lent to Smith and Sons out of the existing or future profits. But this does not, these two aspects does not make the relationship between all the creditors that of a partnership. So there is no mutual agency amongst all the persons who have come together as creditors and who have constituted this company in accordance with the deed of arrangement for the purpose of getting their dues from the original firm, that is Smith and Son, Smith and Sons. So the court indicated that if two or more are to carry out any trade and share profits, each is a principal and each is an agent for the other, and each is bound by the other's contract in carrying on trade as much as a single principal would be by the act of an agent who was to give the whole of the profits to his employer. So if it is like a what is it, a principal and an agent, that kind of a relationship that is there, then only it will be a partnership, but not that of in case of a co-ownership or in any other manner. Here, basically, it can be called as a co-ownership because they all own money and they were conducting the business merely to recover the money that they were supposed to be receiving. Then section 5 talks about partnership not being created by status. So the section says the relationship of partnership arises from contract and not from status. So basically, agreement is the essential part of initiating of partnership or creation of the relationship of partner, but mere status of the persons does not make them partners. And for example, they made it clear by indicating that members of the Hindu undivided family carrying on a family business as such, or Burmese Buddhist husband and wife carrying on business as such, that is as husband and wife or as members of the Hindu undivided family. If they do their business, then they don't become partners. So it is not the related status of persons carrying on business together does not make the relationship a partnership. So there are more elements required to it. Then section 6 says, how do you determine whether a relationship is partnership and whether the person who is acting is a partner or not? So the real relationship between partners as shown by the relevant facts taken together should be used to determine whether a group of persons is a firm or not. And second, whether the person who is operating in this group is a partner or not. So it has to be basically based on the facts and circumstances of the case and the terms of agreement. So it's following by itself does not make a person a partner. So any of these instances merely does not make the person a partner. So there has to be something more than this for the relationship to be a partnership. So sharing of profits arising from property will not make it a partnership firm. Then where there are gross returns by joint owners, like what was there in case of Cox versus Hickman, if these people made some profit, that and sharing those profits does not make them a partnership firm. That is what the court held. Then receiving of share of profits of business and payment contingent upon earning of profits. Like in case of a salaried partner, I'm going to say that if I'm going to make a partnership, make a profit, I'm going to give money. Otherwise, I'm not going to give you money. So payment contingent upon earning profits or varying with the profit. So if I'm getting 100 rupees, I will give you 10. If I get 1,000, I will give you 20. So that kind of variation does not per se make him the partner or the relationship a partnership. And the section goes ahead and says that receipt of share of payment, which is a sharing which may appear to be sharing of profits, but merely making a payment in the following instances do not of itself make the receiver a partner. So what are those instances? Where someone has lent money for a business to be conducted to persons engaged in a business. So the automatically the persons have to pay him interest. So does the lender become a partner? No, merely because he is paid out of the returns as interest, it does not make him a partner. And the persons who are engaged in business, he does not become a partner along with them. Similarly, a servant or an agent who is operating, like what I talked about, like an employee, he gets a remuneration or a salary. He cannot be an agent unless you are mentioning expressly that he is a partner. And there is more incidents to it than merely getting this remuneration. Then a widow or child of a deceased partner getting an annuity, like a pension for the time that he has been a partner, if the partners agree and give a pension, those people will not automatically be eligible to be called as partners. Then a previous owner or part owner of the business has consideration for the sale of goodwill or a share thereof. So a business has been continuing, that has been taken over by a new set of partner, and for the part of share will, as a share of goodwill, instead of paying him a lump sum amount, you are paying something. So that does not make the person as a partner of the firm. So these are some of the aspects relating to partnership. Then partnership at will. The partnerships basically are of two types. One, where there is a duration fixed, either expressly or impliedly, and it will be dissolved after the time is completed, and it can be agreed to continue even after the death or retirement of a partnership. Then in that case, mutual consent will be necessary for dissolution. So the partnership will be treated to be a continuing partnership. Then where the duration is not specified, then continuous is for as long as the partners are willing to continue. So here in that particular case, a mere notice is sufficient for dissolution, and that kind of a partnership which is running beyond its duration, or where there is no duration that is indicated, that will be called as a partnership at will. And it makes it easy for dissolving such partnership or people retiring from such partnership after giving a notice. That is the ease of a partnership at will. But a professionally drafted deed, as I told you earlier, should incorporate duration for making clarity, bringing in clarity and certainty of the nature and duration of the partnership. Then particular partnership, a person may become a partner with another person in any particular adventure or undertaking as well. Section 8, this is what is a particular partnership. So it need not be for several activities, it need not be a permanent relationship, but it can be a transactional relationship for a partnership. It can be a temporary and purposive relationship, provided all the requirements of participation of partnership are fulfilled. So I want to have a single voyage of potatoes, single shipment of brown sugar. So these have been held to be partnerships, particular partnerships, and it is not necessary that you should have a sequence of transactions, etc. So even single transaction is enough. And in one case of Gerulal Parak, though the partnership was a wagering transaction for wagering transactions, so they the contract was not valid, but to the extent that there is an element of partnership that is there, they held that for one round, one season of wagering transactions also, if the relationship is there, then that is sufficient to be treated as a particular partnership. So these are the aspects relating to the nature of partnership. One, section 4 to 8, chapter 2 of the Partnership Act. So what are the essential elements of partners? What is partnership at will? Who is a salaried partner and how do you treat him? Whether you treat him as a partner or an employee, and then how do you ascertain whether there is a relationship between people as a partnership firm and whether a person who is acting is a partner or not. So this is what is the content of this particular chapter. Thank you.